Anyway, the headline consumer price index in the US fell from 1% to 0.9. Right. A bit, of course, disappointing. That didn't move the dollar too much. Okay, let's look at other charts, but rate hike expectations are a bit lower. Okay, so let's look at other charts. Hope you can see them. I'm on full screen anyway, so my screen sharing is at the maximum possible. So currently euro dollar at 112.50, scratching the lows. Okay, 112.50 was breached yesterday, but then euro dollar recaptured this level, and we're back above it right now. Okay, so it's 112.50, battling with this line. 113.35 was the previous low support. Now it turns into resistance. Further support at 112.15, followed by 111.50, which is becoming a stronger line. Okay, so the euro is not going anywhere fast. The euro is unable to take advantage of this US dollar, of the weak US dollar, US figures. Okay, pound dollar remains depressed in the same range. You zoom in a bit so you can see it better. Anyway, 141.75 works very nicely as resistance, and immediate resistance at 141.25. Further resistance at 140.50. We didn't get anything of substance from the UK, but the Brexit fears. Sorry, I mean nothing substantive from the UK yesterday in the rate decision. Of course, we'll talk about that soon. But anyway, so that's where we are with the same old range. The Bank of England did not move the pound. In Japan, we had bad news of an earthquake. They say it's the worst since the disaster, the catastrophe of March 2011, 5 years ago. It's still not that magnitude, but some people were killed, and that sort of worsened the mood in Japan, in the stock market, and also it boosts the yen a bit. Remember, bad news in the world and also in Japan is good news for the Japanese yen. So the effect so far is local. It's not a risk-off sentiment. It's just some strengthening of the yen. But remember, dollar yen is still holding above this 109 level. It managed to reach during the Asian session 109.73. The range is not that huge. Anyway, 110 is resistance, followed by 111, support at 107.65. Okay, dollar CAD, of course, awaiting that Doha meeting. We'll do a preview for that. But currently under 128.30 still works as resistance. It used to be a very, very strong line in 2015. It's not as strong, but still worth noting. On the upside, 128.30, followed by 129.30, and support at 127.50. The Nikkei is trading in a tight range in the last 24 hours. And also dollar yen is not going anywhere fast. Okay, so markets are relatively stable. Now we're seeing the Aussie dollar, move a bit higher. It's basically up on the day, but it sort of finds it hard to reach higher ground. We had a good jobs report from Australia, good Chinese trade balance, and now positive figures, not necessarily GDP, but the other figures were positive. So anyway, here we are on the Aussie. We talked about that. Kiwi dollar stands out this morning, but basically it bounced off this support at 68.20, worked very nicely, 68.20. Now we're moving it back up above 69, 68.80. Well, some kind of weak support at the moment, followed by 69.80. Okay, dollar Swiss at 96.80. At the moment, moving up because of the some US dollar strength, and as I mentioned, the weak inflation figures did not hurt the US dollar too much, and there's also probably some support from the Swiss National Bank weakening the franc against the euro. 96.80 is the current level, resistance only at 98, support at 96.40. We're seeing that after the pair recaptured this line, it's holding above this line. So in terms of technical behavior, at least dollar Swiss is a-okay. Euro Swiss very, very choppy, getting closer to 109. We had it gradually falling, but it was cushioned probably by the S&B. Euro pound, well, we fell off the highs. You can see this kind of sort of head and shoulders pattern. One shoulder here, the big head here, another shoulder, and the slide. 79.30 was resistance, was the high level not that long ago, and now it works very nicely as support. I still think the pound is weaker than the euro because of the Brexit. Of course, Brexit can impact, the fear of the Brexit or the potential vote for that can impact the pound more than the euro, but it can also hurt the euro. Anyway, 79.30 support, 80.25 I guess is resistance, followed by 81.80. Okay, euro yen, very, very stable. Both currencies are relatively stable against the US dollar. Currently at 123, 122.50 works as support, 124.20 as resistance. Pound yen, well, 154.60 used to be a significant line, and not so much anymore. Anyway, 151.80 is certainly strong support. 156.60 is resistance. Okay, if we'll have to choose new lines here, I guess we could move this up here to 155.80 and maybe add another line to the downside. The range is relatively narrow, okay, in pound yen, in the dragon, in the Gepi, 154 is support. You got used to much bigger ranges over there. Okay, so let's continue. Oil prices, of course, relevant for the Canadian dollar, also maintaining some stability in the last 24 hours or so. Okay, at the $41 handle on WTI crude oil, between 41.30 to 41.70 at the moment. We already reached higher ground earlier this week, well above 42, and that's the big focus of the weekend. Okay, let's talk about other events and then preview what's going on today. So I mentioned the earthquake. There was some talk that the Bank of Japan could begin buying ETFs, index bonds, things like that. These are old rumors. They might become reality, but you never know. Okay, nothing happened with that. Yesterday we had Eurozone CPI coming out better than expected. The headline came out at 0 instead of minus 0.1, so that was good news. Okay, so we had that I can't say it supported the euro. These are final figures, and the tick up or down isn't such big news. With the preliminary figures, we often have bigger surprises. At the Bank of England, we covered that, Valeria Bednarik and myself. Basically, what we heard from the Bank of England was a unanimous decision to keep interest rates unchanged. They're unchanged since March 2009 at 0.5%. There were some rumors before the event that two members of the Bank of England could vote for a rate cut, but of course it's better to keep the powder dry and to cut rates in a potential emergency meeting after a potential Brexit. I still think it's unlikely, but you never know. So we did have them warning about growing uncertainty. It seems like they're making contingency plans. They're not happy with the Brexit. They're not really objective. They're not really neutral. But regarding market movement, the pound did not move at all. Okay, U.S. inflation, we talked about that. We saw the miss. Jobless claims, they actually surprised on the upside. That means, on the downside, but that's good news. Less people looking for jobless, for benefits is good news. We had it drop to 253, not sort of earth-shattering, but nevertheless good news. And we talked about Chinese GDP. Now let's move to the event for today. Okay, at 8:30 we have UK construction output, and then Eurozone trade balance. Let's look at that. I don't have this figure here. Anyway, trade balance in the Eurozone is expected to be positive, 21.2 and 21 last time, and this time 21.9. Not such a big difference. We have the New York Empire State Manufacturing Index that's we did see some kind of stabilization, some kind of a rebound in the manufacturing sector in the United States. It's still the weakest link, still perhaps in the recession only in the manufacturing sector, but things have stabilized. If we look at the New York Empire State figure, if we look at the Philly Fed one, if we look at other pieces of data, ISM manufacturing PMI, things like that. Anyway, another small rise is expected. We have also in Canada manufacturing shipments. These are expected to slide after they advanced last time. Bigger font right here. And we have industrial output in the US that's at 115 GMT. It's expected to drop 0.1. Again, the manufacturing sector, industrial output does not look that good. Together with that, we have the capacity utilization rate. But the main event for today is well, it isn't given much importance here. I think it is a bit more important than the calendar suggests. The Reuters University of Michigan consumer sentiment expected to advance from 91 to 92 points. This in theory reflects consumer spending. So if we have more people, if we have more confident consumers, in theory, we have more consumption. Okay, the correlation is not that clear, but it's sort of the last important figure that the markets will receive ahead of the weekend, and usually does have some kind of an impact. Okay, watch out also for the sub-components of that. Let's see if I didn't miss anything. Well, we have the Baker Hughes release, but that has become less important because what's important is actual production, not the number of rigs, not the number of oil wells. We do have the IMF meeting. A question here by Jax. The IMF meeting is important because they already published their gloomy forecasts. I mean, it is important, but I think most of the stuff is already out. Okay, so we do have a meeting. Maybe we'll have more statements, but we already have. The IMF already released its forecasts, lowered global growth forecasts and things like that. So I don't expect anything new. They did warn about the Brexit. They did tell governments in the Eurozone to spend more. They do want even more from China. They see a weak picture and they want everybody to do something, okay? And their growth forecasts, but they're already out. So I don't see anything new that they can say over the weekend. There is a much bigger event over the weekend. Okay, we covered here all the event for today, consumer sentiment. I think it's the most important one, but it's a relatively light day in markets in terms of, I mean, we had yesterday US inflation, GDP from China, things like that. The big event over the weekend is that will surely impact the market open on Monday, is this meeting in Doha, the capital of Qatar. Russia, Saudi Arabia are the main players, and Iran, Russia and Saudi Arabia in theory agreed to freeze production at the January levels. More or less, the details need to be ironed out and announced. But it's not clear if this will really happen. In Iran, just came out of the international sanctions and wants to pump as much as possible. So Libya, which is in terrible civil war, they also want to reach higher production, and everybody's willing to freeze once they reach higher production. We know that also Russia reached higher production. I have lots of doubts about the success of this meeting. First of all, these countries don't like each other. Iran and Saudi Arabia are long rivals because of different in the Shia and Sunni religions, but mostly about oil and about intervening in other countries there. Civil war in Syria, Iran is with the Assad regime, Saudi Arabia is against them. Russia is with the Assad regime, and another thing, everybody wants others to cut. So we've seen that in the past, and we might see it now as well. And there is a lack of trust. In the past, they did make some kind of agreements, but didn't fulfill them. I'm talking about Russia, I'm talking about Saudi Arabia. We also know that within OPEC never meets its own quotas, it exceeds them. And another reason to be skeptical is that currently oil prices are off the lows, actually 50% or more off the extreme lows. So the motivation for deciding to make any cut in production, I think, is low. My bias, my expectation, not a trade advice, is that we might see the morning, everybody. Good morning, Luca. Is that we might see. My bias is that we'll see some kind of agreement, but it'll be analyzed as weak, not serious, not enforceable, not worth the paper it's written on, and not ambitious enough even on paper, and that oil prices will tank, will fall on Monday, and that could impact the whole markets negatively, perhaps support the Japanese yen and things like that. Maybe that's an extreme scenario. The good scenario for oil, for the Canadian dollar, is that they make an ambitious agreement with some kind of ways to enforce it. Okay, I'm very, very doubtful, but that will be a big thing. It'll certainly impact the market open on Monday in Asia, and also have a big impact for the next few days. Okay, so that's something to watch over the weekend. All right, so that was the OPEC preview. That's more important than the IMF. Okay, let's do the wrap up for today. And then, as always, we'll have the preview for next week's event. We already talked about OPEC, but yeah, let's talk about that. Before that, we have a question here. Agree on shorts CAD yen 85.40 and keeping it into the weekend. So let's look at the currency pair you talked about. CAD yen, right? Sorry for that. Anyway, CAD yen at 85.30 at the moment. You're going short. Yeah, there is lots of room to the downside. 82 is very strong support over there. Before that, we have 84.30 because that worked as support beforehand. 83.50 and yeah, on the upside, 85. Well, 86, I would say, and 87. Yeah, 87. Okay, so yeah, if your bias is also like mine, that we will not have an agreement, we'll have more doom and gloom and weakness for the Canadian dollar. So I see fundamentals as supporting short, but yeah, trade with care. Remember, markets are closed over the weekend, and changing your mind will be hard to do. Okay, so let's begin the wrap up for today. So this is the wrap up for the live market open for Friday. Happy Friday, April 15th. I'm Michael. Well, I said that in the beginning. We have a positive mood in markets because of stable Chinese data, but there are also doubts that this growth is based on too much government spending, too much easy credit that just creates bigger bubbles, and fears that this kind of growth, due to this growth, 6.7 as expected, with better retail sales, better industrial output, will not have more stimulus. So markets are a bit mixed, a bit confused. We've seen an optimistic mood, but very, very cautious. In the US, there's no rush to raise rates after inflation missed once again, and we had heard some Fed officials sort of taking their time. For the yen, we had an earthquake in Japan with a few people killed over there, and this weighs on dollar yen, helps the Japanese yen. Data yesterday, well, the biggest topics we talked about. The Bank of England is very worried about a Brexit, but that's not new, and that did not move markets. This morning we have UK construction output, not that important. Eurozone trade downs, this could be a bit more important. The Eurozone continues enjoying a high surplus thanks to Germany. Canadian manufacturing sales and the US Empire State Manufacturing Index could give us, well, sorry, yeah, all our figures related to manufacturing, Empire State, and the US industrial output. Okay, these are we have seen some improvement in the US manufacturing sector, but perhaps it's not enough. Perhaps the most important release for today is at 2 GMT. US consumer sentiment expected to advance. It's for the month of April. It's a preliminary figure, supposed to give us some hope after the weak retail sales report earlier this week. Perhaps this will give us some hope for more consumption in the beginning of the second quarter. Okay, regarding currencies, we are very stable right here. Very narrow range, euro, dollar at 112.60, 112.50 weak support followed by 112.15, resistance 113.35 to 114.60, pound dollar at a narrow range 141.54, 141.25 and 140.50 are support, resistance at 141.75 and 142.20. Okay, dollar yen a bit lower after that earthquake report, but still holding above support at 109. 107.65 is further support. Resistance 110, 111. Dollar CAD 128.10, waiting for that Doha meeting. 127.50 is support. 128.30 weak resistance followed by 129.30. Aussie dollar struggling to break higher ground despite the good news from China. 77.40 is the next line of resistance. 76.40 is support. Kiwi dollar surprises. It stands out with significant rise this morning. It bounced off the lowest support line at 68.20. The next line of resistance as 69.80. Okay. Yeah, I see here some comments at the end of this wrap. Well, use this if your trade goes wrong. Yeah, some funny images here. Thanks, guys. Anyway, now let's move on to the preview for next week's events. Well, the big event for the weekend, as I said, the OPEC non-OPEC meeting. We'll have the big fallout on Monday. My expectations are for a weak agreement that will be dismissed by markets and could lead to a fall in oil prices. But you never know, maybe we'll have a rise in oil prices on a substantial meeting. Anyway, this will dominate markets on Monday. Oil, stronger oil is good for the Canadian dollar. Also drags along the Australian New Zealand dollar, weakens the Japanese yen. On the other hand, if we, as I suspect, we will have something really insignificant, we'll have a fall in oil, fall in commodity currencies, and a rise in the Japanese yen. On Tuesday, we have a German zoo survey. So that will give us a view on the German economy. We heard today that Volkswagen lost a bit of its market share, but is still a successful company, of course. We have also US housing data on Tuesday. Something I didn't write here, but we have the New York primaries in both the Democratic and Republican parties in the United States. It'll be interesting to watch. So far, we haven't had any market impact from the US primaries, but perhaps this could be a bit more decisive. On Wednesday, we have the UK jobs report, including the wage things. This could also feed into the Brexit debate, of course. And on Thursday, we have, it's the most important day. As I see it, we have UK retail sales and then the ECB decision, the Draghi show. The ECB is frustrated by the strength of the euro, despite introducing a huge stimulus package. No policy changes are on the cards after the big move in March. There are also no new forecasts, but Draghi could reopen the door for doing much more and could, of course, also up the ante, up the rhetoric on what governments need to do. Friday could be sort of a hangover day from Draghi. Draghi always provides action to markets. I'm a real fan. And what we still have Eurozone PMIs. And for those trading the loonie, it's concentrated. It's simultaneous release of retail sales and CPI just before the weekend. So the big events for the week are the Doha meeting about oil, the oil summit. Let's see if Russia and Saudi Arabia can agree on something, and if this something is serious. And we have the ECB decision on Thursday. That's the third week of April, April 18th to April 22nd. 5-minute bearish protection. Price action, sorry, on euro dollar. Let's look at that before we go into the sunset, sunrise. wherever you are. Anyway, 5-minute chart. Yeah, we are seeing some action here. If you look at the 5-minute charts, it's a bit noisy. Was sort of some US dollar strength, but we're back into range. I think markets are waiting. I think things will wake up a bit more once we have more headlines regarding oil and when we have the US session. Okay. Anyway, thank you very much, everybody, for coming. Sorry for all the technical issues we had today with the late start of the show and the fact that you're seeing me through a second screen as far as I can see. I hope we won't have these problems next week. Usually all the technical stuff works smoothly. Yeah. What was your specific question on euro dollar? Anyway, I see it as just noise and nothing really serious. Anyway, sorry again for the technical issues. Usually we're doing okay with that. And thank you very much, everybody, for coming. We did have an exciting week. Now things are a bit slowing down, but maybe we'll have a grand finale. I'm sure sure. I think we'll have some kind of Sunday gaps, a strong start to the next week, and then Draghi will provide lots of action for everybody. Okay, so thank you very much, everybody. Once again, wish everybody a safe and successful day today and on Monday morning, and have a great weekend. It's springtime in the old continent. Well, birds are chirping and weather is nice. Days are longer. Yeah, markets might correct downwards today. Traders taking profits. Yeah, hugely bearish on euro. Yeah, euro had a reversal week after showing lots of strength and sort of making attempts to reach higher ground. It sort of found the ceiling at 114.60, and what can't go up probably goes down. So maybe we can see another fall of the euro. But we don't really have anything to move the euro. We do have the Eurogroup meetings, but we did have the Spanish Minister of Industry quit today. He's implicated in the Panama Papers. His name is Soria, I should say. And we have the Eurogroup meetings about Greece, but that remains so far on the back burner. But you never know, these Eurozone crises can always erupt when you're least expecting them, like the Spanish Inquisition. Anyway, thank you very much, everybody. Thank you, Adinda, for all the efforts to resolve the issues, and eventually we had a show. Thank you very much for your questions, and see you on Monday. So thank you, and bye-bye.